All right, I want to make this quick little video because I just had a conversation not too long ago with a realtor friend of mine, and we were talking about the recent decision. Oh, don't forget to subscribe. Tell your friends and family if you're looking to refinance or purchase. I'd love to be your lender of choice. I was having a conversation with an agent friend of mine recently of the decision that the Federal Reserve made, Jay Powell, in announcing that they're going to keep interest rates very, very low for, well, through 2022. And he was asking my opinion about it. And I said, well, low interest rates are good, right? We can't deny that low interest rates are good for a certain group of people. They're not good for everybody. I'm going to explain that here in a second. If you're a homeowner, great time to refinance, right? Great time to refinance. Do get that payment as low as you possibly can. If you're a buyer, great time to buy. Interest rates are low. You can afford more home. And I've always said, if you listen to some of my other videos or talk to me on the phone, low interest rates equal higher price values. Now, the one segment of the population, if you will, that it's not good for, that is the realtors. Realtors, you're going to be in for a rough ride if you're looking for listings in the next 2 years. And my thought process behind that is that if we look back at 2012, 2013, interest rates were low. They were 3.25%, maybe 3%, 3.125. They were low. They weren't as low as they are today, but they were low. And soon after that, I'd have people or realtors come up to me and say, hey, Jason, do you have any ideas on how I can get more listings? I need some listings. And if we think about the realtor's business, it's really listings are just about 50% of their business. Some agents are exclusively listing agents only. So it's 100% of their business. And with low inventory right now, they're struggling for business. And this will continue because if I'm a homeowner and I've got a low interest rate, I'm not going to be too keen to give that up to go out and pay a higher interest rate or even an equal interest rate, but pay a higher price for a home that's equal to what I have currently. And so with these low interest rates pushing values up, low inventory pushing values up, why would I sell my home that I have right now to get into something that's equal to what I have? Why incur that cost? Why move? Or even something that's less superior to what I have in price point or amenities or location because of low inventory. Why would I do that? And even when there is more inventory out there, typically then you will start to see interest rates creep up or be higher. So why would I give up my low interest rate to pay a higher price for something that isn't as equal as what I have now? So I think that there's going to be, some tough roads ahead for realtors in the coming years if interest rates stay low. And I got to be honest, I was really surprised that Jay Powell even announced that. Typically, the Federal Reserve likes to be kind of secretive of what their intentions are, even the next quarter, the next meeting. In this case here, he's pretty much said, hey, look, we are going to keep interest rates low through 2022. That could be tough on realtors. So expect, if you're a realtor, especially with, and I didn't even mention this, but fintech companies, everybody's competing for these listings. There's more people competing for these listings that, we didn't have back in 2013, 2014, 2012, that you have now. So you've got even more companies competing for these listings than you do as an agent. So if you're an agent watching this video, expect some rough roads ahead. And if you'd like some ideas as to how you can differentiate yourself and put out a unique selling proposition to get more listings, reach out to me. I'd love to help. But until next time,